Welcome everyone to the Kendall Report. It is Tuesday night. I saw somebody make a comment. What a day it really was. Crazy. I talked about a CPI surprise. We got that. Pretty amazing. CPI came in at plus 0.1. It was expected 0.3. And the year over year came in at 7.1. Last month it was 7.7. And then the core was 6%, expected to be was 6.3 last month. So all of a sudden people are questioning where that terminal rate is. And so we're going to have a really big session tomorrow. So just before I get into this, make sure you hit the like button, subscribe if you haven't done that. Subscribers are climbing a little bit, appreciate it. And make sure you hit that notification bell as well so you know when I come live. So tomorrow, folks, at 1:30 Eastern time, I'm going to do a live stream, and I'll do a live stream into the close. And depending on how distracting tomorrow is, volatility and all that kind of stuff, maybe we'll even get into some individual stocks and some other things. So mark your calendar, 1:30 tomorrow Eastern time, I'm going to do a live stream. So that'll be pretty good. I'm kind of loading it up as we come into the end of this year. As you know, I've got tonight, the live stream tomorrow night, and Thursday night, and that's going to be it for the year. Hopefully you folks enjoyed. I was a little active on Twitter this morning, and there was right after and I'll go through all this stuff in the technicals, but if you have the indicators and the market grid and you had on a 1 hour chart, you saw off of the news that the RTX sell signal came in right after that news. That first hour trade went up. We got RTX sell. I tweeted out that the algos were telling us they're going to get at least 3 hours of weakness, and boy did we, right? So I'll go through that details here in a few minutes in the technicals, but let's just take a look forward actually and talk about the Fed. And I think this is going to be a fairly brief stream tonight. I don't think it's going to take a lot to set this up, especially since I'll be there mid session with you, but I want to make sure you have everything you need to get started on the trading day. So Fed decision, Powell told us, 2 weeks ago, 0.5, and that's going to be what they're going to do. Now, guess what? They're going to be maybe a little dovish around the inflation number. Everybody started to think about that. I think what happened to the rally today, just from a sentiment standpoint, everybody started thinking about owning the market in the 41 handle, especially not the 41 handle, but 41.8, almost 41.80. Who wants to own the market there? So everybody started selling. It just kind of fed off itself just ahead of the Fed. So that's going to be a key number, though. Today's high will be a number to watch, especially if we get the Powell pump that I've been talking about. I believe that's what we're going to probably get. I don't think they're going to say much to do anything to destroy the markets, that's for sure. I don't see that happening. But the 0.5 is already out there on the table. The question will be, how many quarter point raises will we get? Will we get to 5.25? And I've been talking about probably 5.25, maybe 5.5. But if this really the number that we're going to have to get a handle on is going to be that PCE number. And I'm not sure, I forgot to check and see when that comes out. If anybody knows when it comes out, put it in the comment line if you happen to know when that the next PCE comes out. But what we're going to be looking at tomorrow is, I think, a reasonably confident Jerome Powell talking about we're not done yet, but that's, we're going to slow the pace. There's going to be a bunch of words in there to watch for. The one thing, and I pointed out a couple nights ago, I want everybody to focus in on and pay attention to the QT. If they talk about QT at all, I was flashing back to the Brookings conference that he did. I don't remember mentioning QT or the runoff or anything. Maybe he did, but it doesn't seem like it was coming up, not in a material way. So listen for that tomorrow. We'll be talking about it. We'll go through tomorrow we'll watch the primary comments. We're not going to go through all the questions and be bored with the folks that are asking questions. Most of them, there's a few that are actually understand the markets, but most of them are just reporters. So, but we'll go through the statement a bit and talk about stuff. We'll watch the interaction and the action in the markets as well. So we'll see how that all plays out. But one of the things I'm able to zero down, it looks like they've been doing about 60 billion a month. Now they promised 90, but they're doing about 60. The other day, it looked like I just went back and dug through some numbers. So it looks like they are doing QT, but not at the level that we thought they were going to be, or not what we thought, but what they told us they were going to do. So they're not really pushing that envelope right now. And as I've talked about before, they're selling most in the front end of the curve. And we'll see how this thing all plays out, but I suspect that they'll continue to liquidate a lot. Maybe they'll get to maybe the fives and beyond as far as selling the market. So I still think that the yield curve is going to remain in an inverted state. I believe that the front end of this market will stay up for a while. If these inflation numbers continue to come down pretty drastically over the next couple months, then I don't think we'll see them drop rates. They're going to be pretty cautious about doing that. But that's going to be let me back up. Whether they drop rates or not, that's going to be what the market participants, the news, and everybody's going to be talking about, no matter what they do. It's almost as if all you have to do is command them and they'll do what you want. But I don't think they're going to drop these rates. They're going to be super careful, but that won't really matter in the end, especially if they get to the end of raising them and inflation starts to come back in. And like I've been saying, most of the inflation that's coming back in is kind of mixed, where we're seeing some of the softness in prices and things of that sort. Crude oil starting to firm up a little bit. I'll go through that here shortly. But the patterns that are out there are suggesting that at least we're going to be flat, and they're just going to keep that foot on the pedal. They want to keep that message out there, but it's going to be interesting to see how markets interpret it. And like I said, I'll go through the details here in just a minute on the technicals. As far as anything else, I have very few notes on my tonight to get started. I already made, I'll just say it again, live stream tomorrow, 1:30 p.m. Eastern time here on YouTube. We'll see you there for coverage of Powell and into the close. That'll be about a 2.5 hour stream. So I will see you all there. So let's go ahead and get into the Wavetech database. So a little bit of action here, folks. What I was telling you, that typically once we peak out, we got up to about 82%. We'll come back to 68 to 62. We're right here at 68.28. There were 229 buy signals, 393 sells. So a little attrition coming here on the bullish percent. And what will be interesting, depending on what kind of day we get, because we were up, the S&P was up 0.73 yesterday, NASDAQ up 1, and the Russell up 0.76. It wasn't really that big of a number to influence things at a very high level. And that was, I think, probably the one thing that happened yesterday is that fact that we retraced. At one stage, we were 145, 150 handles off the high of the day. So it was pretty interesting day, and the amount of selling, it was pretty relentless as we went through that. All right, let's get into the technicals here. See if we can get through pretty quick tonight. This is an interesting pattern. I mentioned that we had this, you'll see this very first bar here. Let me just draw a couple things on here. This is the hourly chart that is here. And what this is showing us that we have right here, this bar here was that outside, that big bar. It was an RTX sell signal. Typically that'll suggest at least 2 bars sideways to down. We got actually big down and then ended up collapsing all the way into the 21 period moving average. And matter of fact, it'll take just a minute because I'm going to go ahead and show you something. And this is what I tweeted about yesterday because I think it's worthy of talking about here because it was incredibly interesting. What I'm going to do is, those of you that use TradingView, you know you can do a replay. And what I'm going to do is just right before this came up, I'll show you what the algos were doing. We're going to run just a script for a few bars here. So what was happening as we were coming into that number, all of a sudden PPM2 started projecting that we're going to be strong. PPM1 was already in a very robust mode. This is a 1.11. I always talk to you about the 0.25 number. I want you to see what is going on here. So we get up and we get the spike, okay? Let me change this. Once we get this spike, I want you to see that what the algos were doing is they were flattening out substantial. And then the next bar, as we were coming into that bar, if I can just get one bar to come up. You'll see that this was the next bar. As it started, everything started turning south. And this algo was suggesting that we're going to go through the first and second derivative. And what that means is that we will trade below the 10 period moving average. That's what it's signaling. And right now, at this very moment in time, the last trade was 41.73 and the 10 period moving average was 40.89. So we're talking 100 handles here. So that's pretty substantial from that standpoint. So let's run the script just a little bit more. And you'll see as the next bar comes, everything starts to get extremely weak. And I had tweeted out that it looks like there'd be at least 3 more hours of downward, because what you can do here is you can start to measure where the PPMs are going to be. And you can see here, just as we came in toward the last couple hours of trading, things were looking like they were going to get weak. But as we progress here, I'm just going to run this script. You'll see all of a sudden it just kept getting weaker and projecting weaker and weaker prices. We finally got to an extreme, and this is where we are right now, is we're at the extreme. So now what it's telling us, interesting, is that we should see, at least on PPM1, it looks like it's going to flatten out a little bit. Let me expand this a little bit. That's the white line in this pattern here. So we're trading just above the 10. This is suggesting that the 10 will flatten out and we'll start to move up. So we could see as we come into, let me just show you where roughly we're right about here is where London will come in. So it looks like things we're going to stay stable into London, and then maybe some selling that will come in after the London Open, maybe at midnight, around the mid-session overnight, and that is probably what we're going to see. So watch this really closely from that standpoint. Okay, let's get into some of the technicals here on the daily. And here's our spike up. We got 41.95. If we go back to September 13th, there was a print on that day of 4194.25. Okay, now we look at today, we got up $1 and not even $1.50 above the 13th high, and this thing just completely reversed, right? So we traded all the way down to like a low of 40.89. This is the this pattern is set up. So here, this is the interesting thing. As I was talking to you about the hourly, the daily algos are starting to turn back up. So it looks like in the next couple of days, we could see the 10-period moving average turn up. And this is going to be the key number to watch for. Your major support now is 40.45. Okay, that's the number that you're going to want to watch is 40.45. That should hold. I know that's a little ways down, but not a lot. We'll watch tomorrow. We'll be together when this news comes out. I don't think any big movement will happen until the cat's let out of the bag and we know what these numbers are going to be. So what the numbers are and everything that's happening in the comments. So there'll be two key points, as you know. There'll be the initial Fed statement that comes out, and then at 1/2 we'll probably get some more volatility around comments that Powell's going to make during on his opening comments for his conference call. So we'll try to tune into both and be aware of what's going on during that time. But the whole scenario that's happening here is that it looks like we're going to see the PPM1 in the next coming into the 20th. Now these algos change as I showed you. So as long as we stay over the 10, we should see the strength come back in as we come to the 20th, and we're going to be heading for, Santa Claus rally for sure there. But everything's set up pretty good. I'm going to save any of the longer term stuff. Might get into it tomorrow during the live stream. We're going to have a lot of opportunity. That throws in, literally like 3.5 hours of live streaming that I can go through a lot of details and stuff. And I know I see people asking about Tesla, and I know Tesla got hammered today. So when I'm done, I'll try to come in and maybe at the very end of tonight's video, I'll just do a quick review of Tesla. And I did one, I think, last week or so. But anyway, so all of this is setting up. So it looks like that's what is setting up on the daily charts here. Let's go through real quick and just look at the market grid. I think last night I didn't cover it real well. S1, 40.70. So far we're 89 low, 40.70, and R1 is 41.11, R2 41.34. I think we can see a retest of yesterday's high. I think that is going to be the number, and especially if Powell does look to pump this market, we're going to be printing back up at the RTX level. The last two sessions, by the way, we have printed RTX on the upper end. And what that RTX is that it's a 3-day volatility of the range, and it just tells us the range is expanded. That's why you see the market grid spread out a little bit. That's what is happening right now. And we'll see if we can get out to any further than that, because the total range being projected from STX to RTX is 4,004 to 4177. And I remember the last time we had Powell up, there was some crazy volatility. I mean, really crazy stuff. So anyway, we'll be there together and we'll go through that. But that's the expectations. I'm going to go with potentially probably S2, R2, just on the volatility. That's 4134, 4047. So let's go with those numbers. Next, we'll go to the NASDAQ. Just a little side note that I didn't mention when we were looking at the S&P. We actually we're trading above all of the moving averages, the 200, the 40, everything that I follow. Everything is being traded above. In the case of the NASDAQ, that's not the case, but we're also seeing that looks like the algos are suggesting we're going to see some strength coming in on the upside again over the next couple of days. I think we should challenge. If you look at the very bottom indicator here, this is the Wavetech 200, and that is expecting to see more of the downside pressure dissipate. That number right now is 12,280. So just expect to see that level tested. Right now we're 11,983. So that is going to be tested, I think, in the next couple of days. Maybe even by the end of the week, we could trade above that. If these algos are right, it looks like everything is projecting for a continued stable. The angle of attack is up on all of these things. So the 1021 are right now at the 11,804 and 11,774. So we're trading above those numbers. I believe we'll stay above those numbers here in the next couple of days. So expect that the market is going to have lots of volatility. All right, so next we'll cover RTY, Russell Futures. Everything got that spike, same thing. Algos are turning up. Basically, looks like over the next 2 to 3 sessions, we should see a lot of strength coming up. And like I said, I know that this is my last week, so I'm going to do my best to set up the weekly and monthly charts, and I'll focus in on that on Thursday night. But you can see even the 200 here on the Russell is looking up. And once again, the Russell and the S&P were trading above all of the moving averages, and everything is set to accelerate. So tomorrow will be interesting to see what type of action we get around these numbers. So that is, yeah, I'm anxious for tomorrow. I think it's going to be a big day. I think the last 2 sessions, as I mentioned, we've traded up to RTX on these indexes, and I don't think anyone was looking for that. If you notice, there's no bears hanging around here screaming about the market's going down and all that stuff. So that's maybe good or bad sign, but they're certainly not existent at the moment. So I think a lot of folks got spanked today, and it was a pretty ugly day. These big days, and I've talked about this before with you folks. I'll just go into little mini side thought here. Is when you get these big days like today, everybody didn't make money. People got whipsawed all over the place, both being short and long. They chased it. They did everything wrong. And I've talked about this before. In the old days, when people used to walk down on the trading floor, there was a big, long escalator that came down from the CBOT trading floor, and you could just stand at the bottom of the stairs. A lot of times you'd run into somebody leaving the floor, and you come in and go, hey, what's up? You guys want to go have drinks or whatever we're doing? And we're sitting there talking, and you could just glance and just see the faces coming down, and you could tell what kind of day that was going on with these guys and gals. And I can tell you, on the very big days, there were mostly long faces. It's not good when things are going. If you folks watched that flashback video that I did, and Ben Lichtenstein said something during that while he was screaming, he realized, because he was watching it happen on the floor. He goes, people are going to get blown out in a big way. You have no idea. And what he really was saying, I just watched people get blown out in a big way. You have no idea. And that's why he was screaming, and the emotion that was in that video. So if you did see that, if you didn't see it, it's up on the channel. It's called, I think, a flashback to the flash crash or something like that. Anyway, so everything on all of these algos are suggesting that we're going to see some upward movement here. All right, next we'll go to the 10-year. 10 years, interesting enough, is got the opposite. We're in a downtrend here. This is the daily chart, and the algos are suggesting we're going to go down, so yields will drop, and the momentum on the downside is growing here. And this is, let me expand this chart just so you can see it a bit better. You'll see that the white line is the 10-period moving average. The indicators are coded with the what moving average that they're tracking. So the white ppm with the 10-period moving average. So this is a big number. We're minus 0.69. It's suggesting that tomorrow we're going to a 1.23. So that would suggest that we're going to see yields drop here on the 10-year fairly substantially. The only thing that's not positive, but suggesting that we won't get a big decline is we did get today an STX buy signal. So let's. I'm going to go over to TradeStation real quick, and I'm going to bring it up on TradeStation because I'll have this number here. I have the actual. This is weekly. Let me just convert this over to a daily. I already have the market grid numbers here for tomorrow. So the market grid turned down. It was up in an up channel. Now it's back down. And the values, let me bring that up on screen for you here. The values for tomorrow are suggesting we went out at 350. So S1, 347, S2, 343. On the upside, 353, 356. So on a day like tomorrow, where we have everything focused on interest rates and everything, I would look for an extreme S2, R2 type movement. And like I said, we'll be together, so we'll be able to look at these numbers real time tomorrow. All right, next we'll cover the crude oil. Crude oil did have a decent day. We were able to get back just right at the 10-period moving average. The algos, though, this is what I was saying that earlier in the opening comments, is that we're saying the algos are starting to suggest we're going to see more strength here in the oil, and we should start to challenge the 21-period moving average. That's at 77.90. And then ultimately probably getting up toward the 40 up here at 80.82. So I've been talking about these numbers. If we go to the extreme numbers, really 70.82 is probably the broad range here. But look at these algos. They're all suggesting we're going to turn up, and they're suggesting we're going to turn up tomorrow. So it'll be an interesting. It's going to be an interesting scenario that folds out of here. I didn't go to the weekly on the other markets, but I wanted to bring up the weekly because you're going to see a bit of a weekly reversal. But what's happening on the algos is these moving averages were trading so much lower. Moving averages are trying to catch up to price. But as I mentioned, on a weekly basis, we have a range here. Looking at S1, 68.70, we printed down to 70. R1, 73.34, and the high's been 76.37. So right there, R2, not quite an S1 and an R2, but I expect that we'll see a little more potential rally back in here, maybe getting to the R3 level, which is up to 78. That's probably going to be about your extreme there. Next, we'll cover gold. Gold had a great day yesterday. We're actually seeing some follow through tonight. We're looking at 1822. We're above the 40. This is a weekly, by the way, a weekly chart. And I talked about this throughout this week so far is that the algos are still suggesting that we're going to see some higher prices in this pattern. Everything's really, that angle of attack is still really good, and we're likely to see some much higher prices. I don't have, let me turn on the fib targets here. The only thing that's in here on the fib targets is 1820, 1854 is extreme projection. We look at the market grid here. 1823 is R1. The highs right now, bear with me a second, the high's been 36. So R2 was 38. So we traded basically an R2. S1 is 97. So we've done right now basically an R2 S1, and there could be some more, and that fib target on the upside is as high as 54. So I think that's going to be probably at the upper end here. But what we're seeing is at least 2 more weeks of the strength, and actually I'm going to carry that out. We're not going to cross the first derivative here right now, at least from what the algos are saying, is all the way until the first of the year. So gold's likely to stay positive as we come in to the very first of the year. And I don't know, I didn't mention this. Let me just, one of the things I wanted to mention is there was a deal done with China and Saudi Arabia. They just did a I forget the number, $50 billion deal. And I will tell you, there'll be more talk about this as we get into next year. But the whole concept of this BRIC nations maybe having their own currency, whether it's a yuan or what they're doing, and everything, the rumors are being talked about is that it would be backed by gold. And so more on this as we come into next year. But I've talked about this before. This gold chart is super bullish and on intermediate and longer term. So I'll save that. It won't go through the monthly tonight, but there's a lot of bullishness here on the gold, and something's going on here, and it's a very, very interesting scenario that I think is setting up. So I've said this to you before. Everybody, I think if you went to the mainstream, you looked through every page you could find, you would find that just about everybody is negative on 23. It's going to be terrible year, recession, and all that talk. And right now, as I've told you, I didn't go through the intermediate database tonight, but the intermediate database is not suggesting, at least for the first quarter into the second quarter, looks like it's going to be stable to up. And there's no way to measure that. I could come up with some measurements, but there's no way really to determine what the magnitude and how this market's going to move as we come in to the new year. And I know that the Democrats right now, I think this is an appropriate place to talk about this, are trying to push through this lame duck session and trying to get this big omnibus bill done, which is going to be more and more money spent. And, I don't know how Powell and the boys and girls are going to be able to get this inflation under control if you got crazy people in Washington still looking to spend and all that. And anyway, I think, and you've got a Treasury Department run by Janet Yellen, who's willing to do basically whatever she's told to do. I'm not sure of anything. I saw a press conference today with Cindy Lauper, and I think it was actually Janet Yellen. You guys have to watch that. If you see that, it sounds just like Janet Yellen when she's talking. Anyway, so I had to throw a funny note in there. But anyway, all of this stuff looks pretty bullish. There's a lot of things. We're coming into 23. There's a whole new best narrative that's going to unfold, and I think it's going to unfold fairly early. And I've got, like I said, I'm working on a number of projects and how to capture and how to take care of this. I've been really good. You folks would just have to take my word for this, of figuring out the themes and rotation that where the markets are going to go. You can go back to my 2020 videos in October, November, December of 2020 and look what I was saying there. You'll see I was screaming oil, financials. There's also been a phase where transports were in big time in the play. But I'm looking at a number of things, and like I said, I'm pretty good at figuring out where the next rotation is going to happen. So I'll talk to you that when I'm pretty confident that I've figured it out, but the gears are turning. Let's just put it that way. All right, we'll go through Bitcoin next. And this is getting more and more interesting as we go through. The algos are completely changing what they were doing before. If you remember, they were just looked like a collapse coming. And I talked about this last night in some detail, is that the algos are still suggesting that there's still some downside, but this is the weekly. It looks like there could be one more week of positive, and the potential is for us to test the 10-week moving average. And right now that's at 19,609. And let me just see what I'm sorry. Yeah, this is the 21, not the 10. The 10 is 18,134. So there's resistance there, and then the next level is 19.6, and those numbers are both dropping about, just trying to get a handle on here, about $200 roughly per week. So this is a weekly chart here. So this is going to be all that. So I love what John B is saying. That's exactly. Thank you, John, for giving me even more confidence. I don't mean to be a smartass, but yeah, so there will not be new lows, I don't believe. We'll see. I get to change my mind. But right now, there's no way that's going to happen. But the point that I'm seeing here is that it's amazing that the algos have changed the complete configuration as the market consolidates. And we could see this thing turn positive in the next couple of weeks. Yeah, I don't know. I can't find those bullish people. But anyway, we'll go ahead and, so you get the picture on this. I've been talking about it, so we'll continue to go through that. So I'll come up. This will be the end of tonight's video. Remember, 1:30 tomorrow. We'll do this live stream. We'll check out Powell. We'll check out the market activity. We'll go through everything from that standpoint, and we'll hang out together. Oh, I did promise Tesla, didn't I? I promised Tesla. So let's go back. Let me go to a different screen here, and we'll go back and take a look at that real quick. So really the main thing to look at here is the weekly chart. I remember covering this a couple of weeks ago. It still looks like to me that we're going to rebound back toward this 200 week moving average. The algos are suggesting that, but there's an awful lot of negative pressure right now. We're still in a big time mode. This 10 period moving average is going to be the number to watch. If we get rejected off of that, it's at right now 194 weekly. If going down about 6 handles, so that's going to be we'll be pushing what, 188. That's going to be the number. And I saw somebody say that Tesla's at $10, and I would just tell you, I think the entire EV sector is a joke. I don't, I spent a whole week basically riding around in a Tesla when I was in Switzerland last summer, and I can tell you it's an okay car. They're not really that good at cars, and there's planned obsolescence. And not only do we need to make batteries for new ones, you need to make batteries to replace in the old ones. So at some stage, it just becomes a complete cluster, and there's no way to service the entire industry. And the cars are throwaways, so you're gonna have to recycle them. They're really not fixable. Really a bad idea. I think probably maybe the Fords and the GMs and the Mercedes, maybe they have more promise if they've made, but still the same problem exists. Can't make enough batteries, and then once you make enough, you're going to have to replace the ones that you made 5, 6, 8 years ago and try to and keep these vehicles going. I mean, I was on the road today and I saw a guy in an old 1956 Chevy with Krager mags on it, right? You're not going to see that. You're not going to be able to go back 50 years and see anything like that. You go forward 50, you're not going to see a whatever, like equal to a 1956 Chevy. But anyway, I think this stock is in trouble, and there's a couple things that happen. We got a monthly RTX sell here, and we've just been out of all of the months today to record since we got the RTX sell signal, which was, by the way, on October 21. Since that moment, there's only been 2 monthly bars up. So we're going to have to rebound here, PDQ, as they say, pretty damn quick, or we're going to have some issues. And I think ultimately, because of the slope of the 40, we could get into what I call a trading range of the 193 to 254 level. But the next couple of weeks are going to be pretty critical. This thing breaks down much further, it's going to be a problem. Because once we get through the month of December, this channel could turn down on the market grid. So I'll update that again. Yeah, I hear you, Todd. I know it's more than a thing. We went through in the live room today, we went through all the meme stocks. They all started looking just like this. Ultimately, they come down in toward this base. And I've said this before, back when we got that monthly reversal, I thought we would come at least down to these levels. You can probably find this on some of my old live streams, back to 181, which was that previous low. I said, if we get through that, you're heading for somewhere under $177, something like that, and maybe they'll become a phone company. But right now, this stock's in big trouble. They're just not. I mean, if I were going to buy one, I would buy the new EOS SUV Mercedes. That's like super cool car and has quality. The inside of a Tesla is just a bunch of plastic with a computer screen. Not a good car. Not a luxury car, not for the money. Just not a good car, I know. Yeah, so a couple questions. I'm running over a little bit. I just looking. Shaitan Tony's going, Bob, why does Powell want to pump this? Because they don't need asset prices to decline. There's something going on in the banking system. You don't need the investment accounts and other areas in the banking system to collapse internally. There's already a lot of pressure on a lot of these banks. So there's two different segments of the bank. There's one that is an investment and a portfolio, and then there's basically the bond portfolio, and that's held against assets, so to speak. Excuse me, and some of this stuff is not marked to the market. Some is, so you don't need asset prices to completely plummet, because now it starts to generate all kinds of other problems. Just flash back to 2008-9 when we saw that. You don't need asset prices to come apart. So they just need stable to up is good. I think that's what we'll get out of this. Okay, folks. Hey, we'll see you at 1:30 tomorrow. Live, watch and see what all this stuff means. Hopefully, we'll get some insight. And like I've said before, I believe what happens tomorrow will set the tone for the balance of the year and how all those investment committees and people are going to restructure portfolios and how everybody's going to start to look at 2023. I think it'll be probably much different than everyone thinks. Anyway, remember to subscribe, hit the like button, hit the notification bell. I will see you folks at 1:30 tomorrow. Looking forward to it.